Good afternoon, everybody, or good morning, depending on where you are in the world. Super session that we've got today, focused on the future of logistic real estate, and in partnership with Transport Logistics. And it's one of those topics that we've been following for a little while at Transport Logistics. We're obviously often looking at the real estate side of that, but it's fascinating also to see the trends, and I'm delighted here to have the partnership with Transport Logistics, and delighted as well that Dr. Robert Schönberger can join us, who's the lead on Transport Logistics in Munich, but also globally, for a welcome. So over to you, Robert.
Yeah, thank you, Richard, for your kind introduction. Logistics certainly doesn't work without trucks, trains, ships, or airplanes, but not without real estate either. And to put it very metaphorically, logistics real estate is the common roof of our industry. And that is also what we see at Transport Logistic every 2 years in Munich. The topic of real estate is becoming increasingly important. Logistics is one of the booming industry that has not only come through the COVID pandemic quite well, but has also developed successful in recent months, contrary to many expectations. And above all, continues to look positively into the future, which may also lead to additional demand for logistics real estate. In Munich, this industry presents itself to a global audience every 2 years. At the 2023 trade show, we did welcome 2,320 exhibitors from 67 countries. 30% of the exhibitors came from abroad. And you're coming from an industry that is very familiar with square meters, so maybe some numbers for you. Transport Logistic occupied 127,000 square meters of exhibition space with more than 75,000 visitors from 135 countries. So every second visitor actually also came from abroad. This was 18.5% more visitors than in 2019, the last trade fair before the pandemic. For us, a real proof that trade fairs continue to be of great importance for the service industries like logistics. And Transport Logistic itself is really the largest show in the world by far for our industry. Logistics is a global industry, but still characterized by medium-sized companies. And you can meet these people here in Munich. You can exchange ideas and introduce yourselves as partner for future projects. Almost 40 companies do this and are part of our exhibition every 2 years from the logistics real estate industry. CBRE, Collier, GARBE, Jean Long LaSalle, Prologis, Realogis, Savills, Swiss Life Asset, just to mention a few of the names you are very familiar with. This is also certainly thanks to strong partners like Richard, who have been actively involved in shaping our conference program for several years. We offer 5 different stages with over 80 sessions and 265 speakers discussing all aspects of logistics. And we would like to continue these discussions today, and I would like to thank the speakers who are about to give us an exciting insight. But it's not just a continuation, it's also a starting point for the discussions and exchanges at the upcoming fair. For 2025, we are planning with an increased space of 11 halls, plus the open air space, of course. The new dates for the show are Monday 2nd to Thursday 5th in June 2025. You are, of course, welcome to participate as a visitor, but also as exhibitor. Should you wish to book a stand, then the online application is now open. The deadline for the applications is September 15th, 2024. The website transportlogistic.de. And if you have any suggestions or questions, my team and I will be happy to help you at any time. But well, for now, have a good webinar, good discussions, and lots of new insights. Thank you, Richard.
Thanks very much, Robert. And certainly we've been running now for the past 6 years a focus on real estate as part of the official program there in Munich. And fascinating to see that, and look forward to partnering again, Robert. We've got a fascinating panel coming up, but first of all, I just wanted to go to you, Inga. So Inga Schwarz, who's Head of Research Germany for BNP Paribas Real Estate. Just to give us an overview, Inga, if you can, on some of the trends, some of the numbers, and then what we'll do is we'll then pick up on that in the discussion. Over to you, Inga.
Excellent. Thank you very much. Richard. Good afternoon, everybody here from Western Europe. So I'm here not to talk about the German logistics markets, which is one of the most important markets in Europe because it's a logistics corridor and a strong economy, but here to talk about the European market in a whole. So let me start with where are we now. My topic is now, my challenge is to use the next 50 minutes to talk about the leasing markets, the investment market. Where have we been over the past 2 years, especially since COVID? Where are we now in Q1? And then I'll open up the discussions because there's so much ahead of us, trends and challenges, and I have great panelists next to me who will jump in. So if you take a look at the first slide, I'll quickly mention the market moving topics in 2024. The slide here, this mountain, this is a picture taken of Jackson Hole, where the Fed holds its annual meetings. And this is basically what kept us a breath over the past, 2 years now, is the inflation. If you take a closer look at this slide, it's the moving topics for 2024. It's inflation, it's interest rates, it's political stability, global tensions, economic turnaround, ESG and sustainability, plus e-commerce for logistics. You might think, so what's the news here? It's a lot of what we've seen in 2023. And yes, that is true. A lot of the same fundamentals will keep us a breath, but we see very many signs that indicate a turnaround in many respects. So next slide, please. Okay, here we are. So if you take a closer look on the left-hand side, you can see that this is the inflation. And I need to cheat a little because on my screen, I'm sorry for that, the number's a little slow, a little tiny. So we came out of COVID 2020, or the pandemic hit us, and all of a sudden inflation was rising up simply by the fact that too much money was chasing too little goods. And we saw then, well, in addition, the outbreak of the Ukrainian war, and that accelerated actually inflation driven by rising energy prices, plus the disruption of many supply chains. So in 2022, inflation was as high as 8%. For example, in the US and in the Eurozone, it was 8.4%. In return, the central banks were forced to change the monetary policy and in their aim and the need to fight inflation. So what we've experienced, and that is what was driving the economies over the past 2 years, and most of all also the investment markets, is the hike in policy rates, strong increases driven by the Fed from 4.5% in the US in 2022 to a high of 5.5% in 2023. Similar adjustments in the Eurozone with from 2.5% in 22 to 4.5% in the Eurozone. So that's not much news, but what we've seen, and that's the good news, is that inflation has come down, that the fight against inflation seems to be, for the time being, successful. In the US, we see inflation being more sticky. The economy is proving surprisingly resilient, even though there is these hikes in interest rates. In the Eurozone, inflation rates are coming down more aggressively. We're expecting to see inflation decrease to the target spot rates of around 2%. So over the last couple of months, and that's not news for you, we've seen stable inflation rates with and interest rates with the central banks indicating that they are considering or are considering a decrease in interest rates. The ECB might go first already in June, we'll see. And the Fed is to follow next year. In the lead of this movement, we've seen GDP growth. Does this clicker work now? Oh, here it works. Okay. That's super. So in consequence, and that's not a surprise, the economy was slowing down across the globe. After this drop in strong GDP in 2020, driven by COVID, we saw a rise in 2021, and then the breaks were coming in with GDP seeing modest growth across the globe in 2022, and slower moderate growth in 2023. But I'm asking you to take a look at the forecast of 24 and 25, which you see here. So we are expecting basically that, and that is in line with the forecast of many of the leading institutions across the world, economic institutions, is that GDP growth will stay moderate in 2024, but we'll expect accelerated growth in 2025. So looking at this clicker was interesting. This is now a closer look at country level, and I need you to take a closer look at the green boxes, which is the forecast for 24. And point is that the leading economies in the Eurozone are unlikely to grow at an accelerated pace in 2024, if at all. Most of all in Germany, we might see, and that's even a almost positive news, zero growth. So in 2024, not much more positive news coming out of the UK, with a very moderate GDP forecast of 0.1% in 2024. But I need to ask you to take a look to Spain. This is also where the news is actually coming for the logistics market. Spain seeing a GDP growth of 2%, Portugal 1.5%, and then in the eastern parts of Europe with Poland, Hungary, and Romania, some of the economies are almost moving towards the 3% rise in GDP in 2025. And that is good news for the logistics markets, but I need to stressed already that the logistics letting markets held surprisingly firm despite all the struggles coming from the economy. Why is that? The logistics markets have benefited from different factors. Well, number one was the extreme fundamental change in consumption patterns during COVID time, with e-commerce thriving, the need for more food retail and e-commerce and online shopping. So we have seen a tremendous rise in letting activity in 2021, reaching a letting volume, a record volume of 25 million. And although the economy was already curbed by the rise in interest rates, we've seen a strong letting volume in 2023 with 23.5 million in 2022. And then we have to admit that the slowing down in GDP growth, and especially in manufacturing and exports, hit the European markets quite severely in 2023, with almost like a strong decrease down to 16.2 million square meters. What you can see on the upper slide is that, and that is the good news, that Q4 2023 was the strongest overall over the year. what we need to stress here is that it's not only less demand that is putting pressure on the letting markets, but also, and that's another big topic we're going to discuss, is the limited supply that prevents higher take-up levels. In many markets, vacancy in the industrial markets is below 5% and sometimes even less. We see a severe shortage in modern space and large space available at short notice. It's also a question of what are the lease lengths. So this is what's driving the markets now on the letting side. The bottom side graph shows you the severe drop from quarter to quarter, year on year in Q1. In Germany, it was minus 19%. Also in France, the Netherlands, and Spain, very important logistics regions, minus 43, respectively, minus 38%. Good news is that we've seen a slight tick up in the UK with plus 2%, but it's been a slow start to the year, that's for sure. Clicking on the next slide. Did this work? No, here we are. I find this important to stress again, is the importance of e-commerce that we see. And I want you to take a closer look at the left side. It shows you the growth of online sales of goods per capita in 5 years. And that's the most important part I think we've seen so far. Also in terms of letting volumes, it's the growth in online sales in Italy, for example, between 2019 and 2023 of 98%, which I find just super impressive, but they're coming from a very low volume. Anyhow, even in more mature markets like the UK, it's plus 47%. Germany is lagging behind with 3.7%. And this map on the right-hand side of Europe shows you the disparities between the amount spent online between the various countries. And there's a lot of room for improvement when you compare, for example, the numbers of Germany with around 975 euros per year, and France also around 900 compared to the UK with 1.9 thousand euros. So this is what we believe will be one of the major drivers of take-up in the month and years to come, apart from the fact that also manufacturing and export should pick up soon again. So I talked about the shortage in supply and the high demand levels that we've seen over the past few years. So that is putting a lot of pressure on rents. So we have seen a tremendous rise in rents, unlike ever before, since 2020 into 2024. Even though it's been a somewhat slower start to the year, you can see that even on a year-to-year comparison in Q1, we've seen quite some strong rental growth in many markets, all above Paris with plus 19%, followed by locations like Birmingham and Venlo with plus 11%, and in Oslo it was also plus 17%. What I want to point out now is that you take a look again at the European map, so that you see the disparities in rent levels here. The highest rents are for sure being paid in the UK, London coming first, followed by the Netherlands and Germany, but also Barcelona seeing high rent levels. This story, this development actually, is something that drove and made the logistics investment market the most sought after asset class in 2003 in many countries. So this is something that we've really, that was sort of unexpected for many of us. It not only comes from the growth perspective that this asset class has for sure, but it's also the insecurities that we see in other asset classes, most of all in office. There's a lot of discussion around hybrid working from home, how much office space is needed, in what quantities and qualities. So investors are a little reluctant here. But it's the growth perspective that drives investors into logistics. It's everybody's darling. It was for sure in 2022 and 23. It is impressive to see, if you take a look at this bottom graph, the soaring investment volume in 21 up to 72 billion euros in Europe. Also followed by a strong year in 2022. However, and that is very important to point out, you see in 2022 how the investment volume decreased over the quarter, from quarter to quarter, down to 10 billion Q4 22, and that continued well into 23. The point here is that the hike in interest rates and the negotiations about what's the new price level, that took time, that needed time. What functions for the seller, what functions for the buyer? What we've noticed is that in logistics, unlike in any other class, this adaptation to the new environment was pretty fast, actually pretty quick. So what we see now is there is demand, there is activity, but it's also a lack of product. Okay, so once there is more movement again, more confidence overall in the commercial real estate market, investment market, we are positive to see more activity in the next couple of months and weeks. Trying to do this. Women should do this, right? Be able to do this in parallel. Good. I talked about most of the stuff that you see here on this graph. It's the decrease in investment activity over the last quarters, but good news, seeing a very strong Q3 in 23. So in 24 we expect to see more investment activity. The bottom graph shows you the drop actually and the rise in activity compared to Q1 last year. Good news is in Europe, in Germany, for example, plus of almost 50%. Also in the most important corridors and big corridors like France and the Netherlands, a rise of 16%, albeit everything on a quite modest level, but there'll be more to come, we're sure. Industrial and logistics investment wise, the most important info here is that the bulk of money goes into the biggest markets, which are the UK, Germany, and France. This is the Q1 figures. Germany was 6.5 million, UK unmatched with 10.6 billion, and then followed by France, 3.2 billion. All right, and then we'll go further. Important message here. This is the prime net initial yields shown for logistics, just as expected, and is hopefully described. We've seen the strong rise in net initial yields starting after 2022 with the change in the interest rate environment. We've seen, as I just mentioned, a stabilizing of yields in line, as I said, with the interest rate development plus the adjustment of the purchasing prices in the markets. Okay, so going forward, main factor and main driver that we expect here, not only the change in maybe distribution strategies and storage strategies from just in time to just in case, is the need and the change into online sales in Europe. We see there's, as I said, room for improvement. So the US has an online penetration of 15.6%. In Europe, it's just 11%. So we expect there will be somewhat of an adjustment towards this 15%. And the main driver around this is that most of all the younger generations, as you can see on the bottom graph, is a heavy user of online sales already. But the aging population is also picking up in terms of using online sales. Another topic that I'm happy to discuss with the panelists is the question of labor costs, right? Very great disparities across Europe. How to handle that? I learned yesterday there's also a lot of competition between one distribution center to the neighboring distribution center. It's not only across countries and borders, but also within cities and metropolitan areas. So in a nutshell, what we believe will be our market fundamentals is that the fundamentals remain healthy overall. Take-up is about to pick up again. The yield decompression has come to a close, or well, we think. We expect global activity to strengthen again. We see stronger exports again, stronger manufacturing. Inflation, our most worrying topic out there, seems to be in check. There is a strong potential for online sales, and as I said, the choice of location and labor costs is something that will drive the market. And now, thank you very much, Richard, and everybody else for your attention, and happy to open the floor for everybody else here. Great, thanks very much, Inga. Some really interesting detail there that we can drill down into, and I certainly want to pick up on some of those trends. And we will definitely pick up on the topic around labour and how that's influencing locations, for example, as well. For everybody who's joining live, on the right-hand side of your screen, you'll see that you can log in for the chat and also add questions to that. There's already been quite a lot of activity on there and lots of mentions of Greece, so happy to also try to tackle a little bit of information on Greece coming up. Thanks for those notes already in there. So if you've got anything to contribute, if you've got questions that you want to ask, I'll be watching those live and I'll ask those questions for you live so that we can pick up on your views and the topics you want to pick up. Just quick introductions. For those who don't know me, my name is Richard Betts. I'm one of the founding partners of Real Asset Media, and we run around 60 or 70 of these events. We publish 3 journals, a newsletter. We're very active in terms of industry collaboration. So as well as collaborating with Transport Logistics, we also host the International Investors Lounge at Expo Real, as well as running the Senior Housing and Healthcare Association. So we're very keen to be part of and supporting the industry, as well as writing about the themes, the research and the analysis, the kind of things that are driving the markets. Let's start with introductions of the panel. Jan Dietrich, let's start with you if we can.
I'm Dietrich Hempel. I'm one of the board members of GARBE Industrial Real Estate, one of the big developers in Central Europe, predominantly Germany, but also spreading now across Europe, with also an investment volume, assets under management of some in excess of 7 billion, development pipeline of roughly 3 billion euros. So that's what we do. Me personally, before I joined GARBE, I've been for the better part of my professional career in logistics itself, so I know both sides of the business quite well.
Excellent, and we'll be able to draw on that experience. So that's great. Thanks, Jan Dietrich. René, let's come to you. Quick introduction of yourself and what you do.
Yeah, my name is René Buck. I'm founder and CEO of BCI Global, which is a supply chain and location consulting firm. So we do a lot of work all over the world with our offices in Europe, in the US, and in Asia to talk about the developments of logistics real estate, optimization of supply chain, and finding at the end of the day the best location for a company. That's what BCI Global does with its offices in Europe, 3, 4 in the US, and 3 in Asia.
Great, thanks, René. And that will be interesting to pick up on that point as well. Ingo, coming to you. Quick introduction.
Yes, many thanks, Richard. My name is Ingo Steves. I'm managing partner of Swiss Life Asset Manager platform. We are on the market since 36 months. And before I managing partner with Swiss Life Asset Manager, I was with Gaisley GLP, head of operations for Brookfield in logistics, and I'm really enjoying being on this calls with you here, Richard, in the past, in the present, and in the future.
Great, thank you. And Raimund, over to you.
Hi, Richard. Thanks for having me. Hi, everybody. So I'm looking back as a pioneering time being in e-commerce, Amazon, almost 14 years, starting in 1999. And then lately with Zalando, and just finished actually my official term end of March, going to new endeavors. Currently, I'm establishing the format Voice of the Occupier, what will be a little bit of a platform where the occupiers meet and exchange a little bit. And, because very often we as occupiers are not allowed to speak because we're stock market relevant and you cannot say a lot. So there's maybe something that through these lines, there can be something shared with the investment community and also with some developers. On top of this, we have the Logivalue consultancy company, which is a little bit similar what René is doing, just more focused on e-commerce, is really looking into what are the best locations if you want to serve the customers for B2B and B2C and how to set it up. What is the best infrastructure, looking into this part. And yeah.
Great, thank you. And Inga, I didn't give you a chance to introduce yourself at the beginning. I just put you straight on. So quick introduction from you as well.
No problem. Thank you very much. Thank you for having me. I'm in the industry for more than 20 years, 25 at least. So I'm in research. I usually cover all asset classes. Logistics has been the most dynamic lately, and there's a lot of demand from our logistics colleagues and partners and clients in terms of what is the data, where is the market heading to. There's more drilling now into the singular markets. It's exciting to be here and discuss with some of the veterans here, obviously, in the industry.
Great. Let's kick off maybe with you, Jan, if we can. I guess Inga put forward quite a lot of some of the key trends driving both the occupier side as well as how that's influencing the investment side. I suppose we're here looking at the real estate of the future, and so what do you think that the occupier trends are telling us, or the global trends? I mean, we mentioned there a little bit about changes in supply chain. So I suppose what are some of the key points that you're looking at GARBE?
Well, there's quite a number of things, but before I start on that, maybe I add one thing to Inga's points, because I can only confirm that the market is coming back again. The demand for the logistics space has been always strong, and one proof is certainly that in the more competitively managed portfolios, the vacancy rates have been below 5% all the time over the last couple of years. And our research now managed to prove one point, which is probably true for all more densely populated industrialized areas in Central Europe. We now first proved it for North Rhine-Westphalia. With all the new developments we see, we are often mistaken to believing that we have a net growth in logistics space on a year-over-year basis, which is not true for North Rhine-Westphalia, because as Inga's background picture is here beautifully showing, you know, we look at the port of Hamburg, we look at the Elbphilharmonie, and behind that a lot of residential and office and stuff. That's all has been logistics space. So logistics is very much under pressure, and there are greedy fingers stretching out for every square meter, which is not in use anymore, to redevelop it and put it to another use. But so the market will continue to come back and be as strong again as ever. Trends, what we see is that obviously we are changing now a lot in our industry to become more ESG compliant. I know that ESG is something nobody wants to talk to or tends to talk about anymore, but we can't avoid it. Politically, the most important thing out of this ESG is a E at the moment. CO2 carbon reduction is a big thing, which is not only to be managed for the new developments. That's fairly easy to implement, but also for the vast amounts of real estate which have been in place for the last 40 years and are still usable and still sought after. And there's one political issue. We, as one of the larger developers and portfolio managers, think that we need to sort of contribute to the lobbying of our industry. Our industry is not very good at picking up political trends in time to moderate and manage them. And one thing is that more and more banks and investors are looking at the CRREM tool. CRREM, C-R-R-E-M, stands for Carbon Risk Real Estate Monitor. And we increasingly get asked questions by banks. How is the particular asset performing against the industry curve, which has been defined by some independent institutions? And there we see that most logistics real estate are performing not very good and are stranding. And stranding is a very nasty word we can't avoid anymore because it suggests that this real estate is dropping in value and in the end is, you know, not worth anything anymore. And there's a big misconception. The CRREM curve, which is asking for ever decreasing carbon emissions, may be applicable without any adaptation for residential or for office, because it doesn't really make a difference whether you have an architectural company or an agency of some sort or some lawyers occupying your office space. But it's a whole different story in logistics. And that's what we need to make clear politically, because we can have one building occupied by logistics company A, doing some job with little automation, with little energy consumption, and we can have the same building let to company B, which has a lot of automation, a lot of energy consumption, a lot of open doors and docks and whatever. And this completely diverse sort of use, the owner of the facility is blamed for and measured for. And this is simply something we need to fight. We are trying to do this via the CIA, Zentraler Immobilienausschuss in Germany, and other European organizations now chip in, also major players, in order to make clear that logistics is not like any other asset class. One other trend is obviously, and we are following this as well, or we're trying to lead this in a way, logistics sheds built of wood. We are now in the process of putting one up exclusively built of wood, Straubing near Munich, port area, just to test out what is, you know, doable. Whether all logistics sheds are going to build exclusively of wood, I doubt in the future, because then we have more wasteland all over the planet, I guess, because it takes a lot of wood. But also the energy put into research for carbon neutral, or at least almost emission-free concrete is making big progress. So there's hope that our industry will perform better in future on the carbon curve.
Yeah, and the sustainability side is obviously one of the big trends, absolutely there, I think, Jan Dietrich. Raimund, maybe just coming to you on that point, because I know particularly the sustainability side has been one that you've been tracking for a long time.
Yeah, thanks, Richard. Maybe just one thing to Inga, and I fully agree. I would even say logistics has never been away. You know, it has always been there. It was always a special economy, because particularly with crises, logistics becomes more important. And it's kind of a cycle. The only difference is a cycle on steroids, you know, because it was before exponential growth, then it's abrupt stop. And now the demand will come back, because there is definitely an e-commerce a recovery. And there's something what we forget to say is, for example, Chinese platforms like Temu and Shein, which are making huge business in Europe, but we don't see it in the real estate market because they come in via air freight. But coming to your point, you're absolutely right. ESG is really close to my heart. That's something what we have to fix as a society, but also as a business, because construction and real estate is the biggest polluter. And it's not only about the Krempfahrt is mainly about the usage of the building, but we also have to go into the embodied carbon if you want to tackle it. And that's a very important point. Like Jan, I also agree. It's not only the solution in wooden buildings. You have to find really with Madastra and some other companies, how can you actually follow the life cycle of the products? How can you do cradle to cradle? And really from the beginning have BIM models, the most modern technology, and use it and say, okay, what is actually the material what we're using and what is the life cycle carbon embodied? So that's something what will come, but the big point is not only in the new build, because as Jan also pointed out really well, we will probably see in the next 2 years that more and more the scarcity of land, so it's not even so easy. So what we have to do is the refitting the existing buildings. That's probably the biggest potential, because just tearing them down is not solving the problem, and put a wooden building there. So there's a lot to do, and I think as an occupier, and by the way, I also believe that even in the occupier fraction, the people in the board, they have no idea yet what is actually coming with the CSRD. If suddenly the CEO has to sign next year, the reporting, what they're actually doing, I can think about it already, that there will be a lot of questions to everyone responsible for being for carbon emission and also real estate sector. So this will come with a delayed factor, but even if it is more expensive, it has to happen, because that's one of the wheels you can actually turn around to get it done.
Yeah, and it's quite interesting. I was at the ULI UK event this morning for a couple of hours before joining this, and there was a big discussion points there among a number of senior leaders about the CREM. What does it mean for them? Are they really going to have to do all of these things? And so it seems to be that although that information has been around for a while, that it's actually now really beginning to be taken seriously and noticed in terms of what it means. René, it'd be interesting just to pick up with you as well. I suppose any views that you've got on that side, but also how does that balance within the sort of occupiers that you're talking to in terms of their list of priorities?
I think what Raimund was saying, Jan talked about CREM, and Raimund was also underlining the importance of sustainability. But we have also to be clear, if you have a supply chain, and I'll give you an example. You have a company producing medical products in China, brings it by plane or ship to Europe, say to Hamburg, brings it to a distribution center in Cologne, and then to hospitals in Europe. On that whole trip, so from the manufacturing plant in China to the hospitals wherever in Europe, the building is only 6% of the CO2 emission levels. So if Raimund talks about CSRD, the reporting from a sustainability perspective, companies have to take that whole supply chain into perspective. And one of the interesting elements is what we see is that a lot of companies are decoupling from China. We can also call it in the US and in Europe often reshoring, meaning that companies have more region for region production. And they do that for being less dependent on China, less exposure to supply chain disruptions, closer to the market, lower transportation bills. But interestingly enough, is assembling and producing in Europe means also that you can cut part of that transport from Asia to Europe. So decentralization of production, region for region production, reshoring, however you call it, is also becoming a more interesting element for an interesting instrument for decarbonization, for lowering your CO2 emission levels. So a trend which started for many companies in the supply chain from more a de-risking perspective can also now help you to lower your CO2 emission levels.
Maybe
No, I think that's interesting. Yeah, go ahead. Yeah.
If I can add to that, you know, in my past professional life in logistics, we often discussed upstream. We had to move things upstream. Back then, it was about money. You know, put the labor-intensive bits of the supply chain where, you know, labor was cheapest. Now the distribution of CO2 emission takes a interesting turn, because if you look at an individual logistics facility, the owner is punished for high consumption of electricity. But if this electricity goes into charging electric vehicles, you know, this is something I don't understand. You are punished in the system for charging electric vehicles. That's funny. And if we sort of tend to not properly treat logistics buildings here, and the landlords turn around to the users and say, well, I can't have you as a tenant because your automation rate is too high, you're using too much energy. The functionality doesn't go. It just, you know, doesn't vanish. It just goes somewhere else. So there's something to be corrected in the overall system.
Yeah, it's an interesting topic, I think, and there was a lot of discussion around that as well in our data centers session that we did, and a big focus there on trying to build towards self-sufficiency in terms of green energy. But yeah, a really fascinating topic. Inga, I just want to pick up with you there at Swiss Life. How important is that topic that we're discussing here? You know, the sustainability, lower carbon side, and how big a trend is that in terms of, I suppose, the real estate that you're looking for, that you think the occupiers are also looking for?
Absolutely, very important, Richard. For us, as being one business unit of Swiss Life Asset Manager, it's our DNA. We are 165 years in the business. We are by far the largest European real estate investment manager, and being now in the big box business since 36 months, ESG is one of our focus topic. We had opportunities that we have delivered, for example, the largest development in 2023, completion day, it was in June last year. That was with a very strong occupier from the third-party logistic society in Germany, in Duisburg North, Delta Port, where we did, for example, geothermic, we did floor heating, we did solar panels. That is absolutely our tool set to convince in our customer-centric business to win this kind of customers. Jan has already mentioned, and we need to convince the municipality, because we are always in a tender process to get that size done. So the result was that we have won with that development any awards in 2023 and 2024. For us was the first project, but it was simply in line what Swiss Life Asset Manager has as their DNA. We will look at any development in that respect, that we get BREEAM excellent, so that everybody knows already that we are doing that. For the municipality, for the committee, it's very important. And Inga, it's exciting that we have by accident the same name, Inga and Ingo, here on the call. I think from the capital market point of view, if you don't tick the boxes in that respect, as a developer, you get really a big price hit, and you are getting not to the prime yields you need in your appraisals, in the developer appraisal. So as a must-have, and it's coming from our heart that we are doing that.
Very good. It's an interesting point. I think I want to come back just a little bit to, and thanks also to everybody for everything that you're putting in the chat there. Thank you, Torsten and Ioannis. I will come to the Greek one shortly, but I just wanted to pick up in terms of the supply chain side. I mean, Jan, are you already seeing, and Ingo, are you already seeing that change in the supply chains to much more activity in Europe? Is that, is that creating, I suppose, more demand? What's the situation? Shall I start with you, Jan?
The first hints towards this development, we have first talks and some functionalities which are, expanded by certain tenants, which are not moved to Far East anymore, but now are created and expanded in Europe. Well, but I don't think that this is already big influence on demand. It's a slow process because it's most of the time still mainly about money. And I think for many industries, it's still simply cheaper to have more goods in the supply chain itself and to bolster any failures that might occur, than move whole production lines and value generation steps to Europe again.
Can I add something to that, Richard?
Yeah, of course.
I think the Jan is right that it's not going in huge additional numbers of square meters or companies doing that. But on the other hand, I see with our teams in Asia are constantly working for companies who want to reduce their exposure to China. And what happens is that it's also happening under the surface. So companies expanding in Europe at their regular production or distribution sites, which, if there would be no disruption risk and no geopolitical tension with China, would have occurred in China itself. And I think that element is going to play an important role for many companies. The question is Europe ready for that? So do we have in Germany or in the UK or in the Netherlands, do we have the land, the buildings, the electricity, the labor available if companies set up in Europe? And I think that Inga mentioned that already in her presentation. If there's a market, the question is there enough supply to do it? And I think, and we talked about electricity, which is in a number of logistics hotspots in Europe really becoming a problem. So I think the question is, on the one hand, will that trend occur? In my opinion, yes, it is, because we have a good number of contracts and assignments to work for companies to reach that goal of more regional production. I doubt that I'm interested in the panel's opinion on whether we are really ready in Europe to welcome that new additional flow of demand in terms of supply of buildings, electricity, and talent.
So interesting. Does anybody want to pick that up first?
Yeah, maybe also from my side, I fully agree with René. I think it's happening, but again, like humans always, it's a little bit slow. I think what we are seeing in the moment is that just I think probably the first time that supply chain officers will get a seat at the table, how it is mentioned very often, suddenly the boards see how critical it is. So far, logistic was just something at the back end. And as soon as they get a place at the table, they have to do contingency plans, because I think if there's a lot of fragility around and nobody knows exactly what happens. But I think one thing all the experts agree is hyper-globalization is over. So there will be a lot of reef, rent, near, whatever shoring. And to René's point, I think that's a very important part. We are not ready, also not for all the demand, for the e-commerce demand we have for the EV infrastructure. You know, we need additional storage because they have to still provide for the combustion engine. Still the spare parts, and now the electrical vehicles are coming. Just 7 million is planned for square meters just for battery storage. It's not a special real estate, but it's special requirements. So I think there will be a lot, and I see a high risk that this is not happening from a land scarcity, from electricity, and also sometimes from an investor perspective, because investors are still thinking, okay, we are in a slow economy and they're not allocating enough money. And sometimes you have to start now because you need brownfields, you need longer zoning plans. So it will take some time. So I'm sure it is going to happen. And I'm also sometimes worried, also representing maybe the customer side, you know, that there's not enough space for everyone. And this will be probably a difficult period.
Yes, I'm absolutely.
We are really slowed down. Sorry, Ingo, we are really slowed down in our development processes. We actually have 2 facilities currently which went into use by the tenant with mobile generators on site. They will probably, you know, diesel generators, which will probably run there for a year almost, because the local grid wasn't able to support this additional demand in electricity. And the other way around, in addition, it's, you know, slowing down the famous Energiewende, because our colleagues from our green business unit who put the photovoltaic things on top of our roofs, which is a big contribution logistics can make to this overall change, they can't feed the electricity into the grid because the grid is not able to handle it. And there are also delays up to 2.5 and 3 years for these projects. It's absolutely incredible.
And Inga, you want to pick up?
Yes, Raimund, I think from our perspective, we are not slowing down. No? I think we have now the right funding in place. We have loaded in global capital, looking at to access European logistic cluster. We are going now really spec, 5 of 10 of 9 of 10 development with us as on a speculative basis. Now, you need to have the right capital sources, then you can do that. Because we believe in this market, there will be new service levels on supply chain, and that is I would like to ask René, third-party logistics. This was beside of Germany, where the occupier, 35% of the occupiers are from the manufacturing side, but in most of the European regions, 50% or 60% are coming from the third-party logistics side. How do you see the new roles of third-party logistics? Is there some trends of that something like a fourth-party logistics and that manufacturing or big companies are insourcing their supply chain provider? What is the artificial intelligence, for example, doing with this? And what is then the correlation to the demand of logistics space, more or less?
Okay, if the a great question, not a yes or no answer. Sorry for that, Ingo. I think what we in the organization of the supply chain, you see 4PLs coming in. On the other hand, we see also companies having come aware in the last 4 or 5 years that they were so depending on critical components or sub-assemblies that they source it now in. Companies see that if they are dependent on a critical supplies, you cannot produce. You know, probably everybody recalls that when the COVID was not hitting Europe yet, we had already to stop automotive production in Europe because the parts from China were not coming in. So I think that on the one hand, we see companies insourcing production of critical supplies. On the other hand, the companies are focusing on what their core products are. And it's really depending on the industry. And I think what generally also media and perhaps also not the general public understands is that how many components you need for a certain product. So if you take a stroller, just as an example for your kids, in a stroller, you have 568 components. 568. So you need to, you don't produce them all, you have to get them. I'm based in our worldwide headquarters is in the Netherlands. And we have here a company called ASML who produces the machines to produce semiconductors. So they don't produce semiconductors like Intel and TSMC, but they produce the machines to do that. They have built now a new product. 256,000 components is in that machine. 256,000 components in one product. So you cannot do that all, but what we see is that companies want to control their supply chain more. So in some industries, it's pretty simple to insource or outsource. I think in the majority of the industries, you would see mixed models. But what people recognize is that the critical parts, the critical components, that you need more control of that, or at least have dual options, so that companies say, we don't want to be only dependent on that one supplier in Vietnam. We need also somebody in Spain or in Romania to help us on that product, so that if something happens in the supply chain, we don't have trouble in paradise.
Well, I've learned some very new, interesting stats there, René. Definitely. Good. Inga, it would just be good to pick up with you. I'll come back to you in a second, Inga, if I can. But Inga, you mentioned labour costs as well as part of the location decision. So it would be good just to drill down a little bit into that as one of the drivers, I suppose, for locations.
So you're talking to me, right? I'm always a little irritated with Inga and Inga. Okay, good. I've tried to show you this. I showed you this one map. There's huge discrepancies between labor costs in different countries. That's unsurprising given the maturity of the markets and where the various economies are coming from. But what I've learned yesterday, I'm today not only based in Hamburg, what you think, but I'm in Amsterdam. So I talked to my colleagues in Amsterdam yesterday, and I've learned that in some parts of the Netherlands, especially down the south, where there's like the big distribution centers, there's a lot of competition between the logistics companies in terms of where do the teams that actually work in the centers, what the labor cost is. So if your neighbor offers them just a tiny amount of money more per hour, those teams are ready to move from logistics provider A to B. So there is not only competition between regions and economies in total, but within the players themselves and within the market. So maybe René can shed some light on it. Who's a little closer on that side? No.
But I agree that the labor cost and labor market tightness is a very important element. You mentioned the Netherlands. Now everybody in the Netherlands who wants to work can work, but on the 100 unemployed people, we have now 138 job vacancies. So on the 100 unemployed, even if they all would work, then we still lack 38%. So. And one of the elements which we see happening, and Inga, you mentioned in your talk also about inflation and financing costs. One element, you could say one direction, one solution could be, okay, can we not more use automation and robotization so that we can reduce the number of people we need in the warehouse? But you have to invest for that. And due to the high investment costs, financing costs, and a little bit the uncertainty of the economy, we see that the C-level is hesitating to put money on the table, which has an ROI of 4 or 5 years, while they have only a contract of 3 years. And so the financing side is also, the high financing costs are also prohibiting an acceleration of automation and robotization. Do you agree?
Well, if I may add something, is this what we see across the economies in the markets is, and that is for sure given in a time where there's GDP, recession or just slow growth, is that in times of uncertainty and economic down phase, managers are postponing their decision making, and it's also a question is, you know, what do I need in the future and how do I finance it? And as we've seen financing costs rise tremendously over the past few years, it comes as no surprise really that a lot of decision making in the real estate industry, be it office leasing, be it like logistics investment, be it manufacturing, there has been slow progress. So our hope is, and that's what we've seen now with the interest rates now, that there is this perspective of decreasing interest rates. So we are expecting financing to be cheaper again. There's coming more stability, hopefully, into the markets, into decision making, so that we see more growth across the board, including logistics, not only here, but also logistics. So I'm totally with you that a lot of decision making is postponed, and it's just a question of financing, actually.
If I may add just one thing also, you know, in my past life, it has always been the, you know, the most difficult question, and it became more and more difficult. Where is actually the labor? And of course, with more competition, as Inga and René said, it becomes more difficult. And also I agree, you know, in times when everything becomes more expensive, the means of your business, then you're maybe not investing, especially in uncertain times. But still in certain areas, especially in the contract logistics, it's still a little bit difficult, because even if you would love to do it, it's not 100% possible. So maybe there will be another step change, you know, that the automation will be much better. But for some things like picking, there is some robots out there, but probably it will take another cycle to have it. So in the moment, you still have to deal with at least, you know, maybe before it was something like 4,000 people in peak, but you still need 2,000 people in peak, and for the season, and that's very difficult to achieve. So labor will be certainly one of the biggest challenges.
And
if I may add something, I like the story about the Netherlands and the Dutchies changing jobs for a couple of euros, because when in the good old times I served my apprenticeship in logistics, I entered a logistics facility in the morning. It was like, you know, boarding a submarine. You know, you were completely shut off from the rest of the world, and then, you know, came to daylight again at the end of your shift. And now I sometimes wonder whether we investors are more concerned about the S in ESG than the service providers who employ these people, and far more concerned than the people themselves, you know. The service providers only fairly recently discovered that, you know, the employees behave a little bit like pot plants, you know, they are more healthy if they get a little bit of daylight and stuff, but they are not really worried. If you offer them a facility which comes cheaper, then they will very likely then rent it. And the workforce themselves, the absolute level of income is far more important, I'm under this impression at least, than we conceive when we deliberately drive up our building costs by adding features and features and features, and tell, you know, ourselves that this will increase the sales price, and even tell ourselves that facilities who don't have the whole list of items, you know, you can tick off can't be sold in near future. There's a lot of I think history about this topic, and this nice little example from the Netherlands proves that we probably spend too much in our building process.
And in terms of the... Yeah, go ahead, Raimund.
Sorry, Richard, the panel is taking over.
It's all allowed.
No, but just there's something I have a disagreement. I think it is important that you provide certain environment because it makes a difference. Again, if you have this competition, 3 warehouses, and of course, maybe the money is almost the same, then they would go to the better one. There was a tendency, and I think that's probably what Jan meant. There was a certain point when suddenly you had, they were talking about a forest and a park outside, and they were talking about a gym, and they were talking about climbing walls, and that's just something. It's a little bit white collar, assumes what blue collar likes, because they want to be as short as possible in the building. So they rather want to have a 2.5 an hour break and at 1 hour just that they can go in this little park outside. So I think that's the point. Sometimes there was a focus on things which are not important, but I think that the light and the working environment is important and is also high rated in the ESG. But I know what you mean, Björn.
And how is that? I mean, so the wellness side, we've talked about that a little bit now. We've talked about ESG, carbon reduction. I'm going to pick up a couple of things, but in the chat as well, questions that have come in. But Inga, how is that driving the types of developments that you are doing? Because you obviously have to future-proof them, whether you're buying or developing. You want that asset to be successful, that building to be successful and let to the best clients at the best possible rent for the longest period. So I suppose what are the things that you're having to really think about in order to make sure that that happens?
Yes, I think we are again after a very successful cycle has been done until 2022. I think the repricing has been done now in 2023, and we are beginning and starting a new cycle for developer investor like us. It's quite exciting. I think we can call that time ahead of us the next 10 years. Whoever knows what's happening in the next 10 years, but looking back, it's, I think, the same environment we're having in 2011 and 2012, but the yields are still at the pricing level at the end of 2017. We see at the moment repricing has been done European-wide, a little bit ahead as Jan told us, in the Netherlands, in France. Germany might be now stable, but we see that the construction costs are not that high anymore as it was 24 months ago. We see yield compression again. We see that still rental growth is in the market in most of the logistics cluster we are in. So we have some money to spend on ESG stuff. So we have a buffer for this, and that needs to be, because if you would like really to have the best class development and to have the best occupiers, you need to have that in your building description, your specs. And again, that is a marketing tool as well to convince the municipality, all the stakeholders, that you are the right partners. So we have a building spec including the best-in-class ESG. We have the funding in place for going spec. We have a good relationship to municipalities. The municipalities is clear that we are bringing the best occupiers in place. So it's always what you need to do as a developer investor. A lot of communication, and then you can run the show.
I'm just going to pick up on a question that came in from Tristram Frost. Thanks, Tristram, for joining us. The planning dilemma for e-commerce. Voters want convenience of online retail, but don't want multiple truck deliveries. So planning authorities are increasingly reluctant to give consent for logistics. Or the question Tristram puts is that not the case? For sure, there's an element of that in the UK market. So we're seeing that across. What's our sense of the planning side and how logistics is seen? I don't know if anybody wants to pick that up.
So if nobody else,
yeah, well, you know, it's a topic which comes up again and again and again. And if you look at the big cities in Central Europe, we have a discussion here in Hamburg as well, an ongoing one, how to reduce traffic in the city, how to reduce deliveries to the city. how to achieve more consolidation. There have been numerous calculations which prove the point wrong, that you can win anything anymore by creating white label solutions and so on, because the processes of the individual service providers, at least of the big ones, are already so streamlined, and have been undergoing all sorts of cost cutting and other programs, that there's little fat left you could cut out. And once it comes to the point where you want to create a white label solution, you are up against quite a bit of marketing power, in at least in the bigger organizations like UPS and DHL, particularly in Germany, and FedEx and others, who do not prefer white label on the last customer sort of encounter. And they will be your enemy on that. You can only enforce it by, channeling the market. And at least in Germany, I think in France, probably a little bit less. In the UK, definitely it's a liberal market. You won't find local government which will channel the market to that extent.
There's maybe one point I think, first of all, I always like to emphasize that the freight traffic is not the worst in the city. I think that's not the problem. The only point is you see them. That's the problem, that you see they are always colorful because of marketing, and you're annoyed if they're parking second row. But they all started saying that's not the problem. It's the individual traffic what is actually the problem. And that's, okay, something we cannot solve. I guess something like 15-minute city is only for the big city is probably part of a solution. But what you meant is more the truck traffic on the highway. That's maybe the only thing is what is still increasing. The rail is actually not ready to take it over, not everywhere. And you see definitely there's resistance in cities for planning permits, because that's what they're most worried at. But that will be also something back a little bit to the ESG part. I guess you can only win, on the square land in the future if you have a very good concept in this regards, that you maybe have really ESG, nice looking building. And the second part is maybe just start already that you have EV loading for electrical trucks, even if they're not available, or you think about hydrogen or something. So it has to come, because that's the biggest burden, even if in the times of Corona, logistic became a little bit more popular also in the population, because they know it's important. So, but it's still, I think it's a very good point, Richard, or from the guy asking the question, that it is challenging to get the permits and the agreement from the residents around.
If I may,
go ahead, Inga.
We are sort of very German panel, I think, but I know it's across the metropolitan areas. Is also the same in Amsterdam and the Netherlands. Is this competition for land across the asset classes? Okay, and this is one of the bottlenecks. One of the main challenges this industry is facing, I guess.
But Inga and Raimund, isn't it good times for professional developers that there's really scarcity and low supply of land? Because looking back 15 years, for example, where you get all the land banks across Germany, how are your business plans? How is your development appraisal? Can you really count on stabilizing the asset within the time frame? Let me say after the delivery of the building, after 6 months at minimum? I don't think so. In these days, you need to have, as already suggested by Raimund and Jan, quite convincing concepts that you are the right partners, that the right occupiers, that you have the right building design, that you have all the ESG principles in your DNA, and then you get land, and there's no oversupply of logistics space, and that is a good one. Because 15 or 20 years ago, there was so much oversupply, no rental growth, everything was flat. And it was at these days, remember that 5 years initial lease agreement, and it was pretty sure that after 5 years, the occupier has a lot of other choices he can go to. So there was a massive land use in these days. In these days, it's much more challenging, but I think better for the environmental. That is my idea of it.
Interesting. I'm going to pick up a little bit, just for everybody. There's around 10 minutes left. So if you've got questions or things that you want to put in the chat, now is the time to do it, because there's no point putting in there when we've already finished. So there's a couple of things. I want to talk a little bit about, I suppose, locations and what we're seeing. And it was very interesting, Inga, to see in the presentation there about, you know, the huge growth in terms of e-commerce, for example, in Italy. But we've had a couple of questions around Greece, particularly Piraeus, whether or not, you know, the port is going to be more successful in terms of there being, you know, more of a driver through the Mediterranean. So it'd be interesting just to get people's views on Greece. And I have to say that I've probably discussed Greece more in the last 2 months than I probably have done in the last 5 years. So interesting to see more, you know, more of a focus on that market. But so let's pick up that.
And Richard, that is not because you went on holiday to Greece. That's not the case.
No, although, well, that may be the case, but but let's pick up on Greece if we can within that. But also more broadly, I guess, what are the things that are going to be driving locations? Is it that e-commerce side? Is it to do with where, you know, there's going to be increased shipping? What's driving it really?
We have a specialist on Greece on the panel, actually. So I have to admit, actually, that I'm well aware of the fact that Piraeus is a very important market, and I think it has some Chinese investment in the background, if I'm not mistaken. But I'm unsure, I have to admit, about how political tensions around and this is where I need to mention some of the points I stressed before, is political tensions and war conflicts around also the Red Sea and in the southeast of Europe / Mediterranean / Middle East have an impact on trade flows in Greece. But maybe GARBE has more to say on it, or René, maybe?
Depends really, you know, what logistical role you think is Piraeus and Greece or other Mediterranean ports, you know, like Koper or Trieste or others. You know, before the Gaza incidents developed, it would probably have been more likely for shipping companies to extend or to drop more of their containers off in Mediterranean ports, at least in those two Mediterranean ports. And we looked closer at places like Koper, for example, but then decided not to invest there at the time being, because what you need, I mean, Greece and Slovenia and, you know, other countries are not big markets themselves. So the majority of the goods dropped off there are going to other places in southern and central and northern Europe. So what you need to look at is it a pure transshipment hub, or is it something where you can go inland, where you can transship on railways and cheaply transport it into central and northern Europe? And for most of these ports, maybe with the exception of Trieste, that's not true. For Koper, for example, they are still sitting on their old infrastructure from good old, you know, Eastern Bloc times, with difficult electrical system, no alternative current, but this old stuff, and so on and so on. So I'm a bit skeptic whether Piraeus will be anything else than a medium-sized Mediterranean transshipment hub and develop into, you know, multimodal sort of facility, I doubt it. The same is true, you know, and as a pure transshipment, Malta is competing now quite intensively with Piraeus. I think more interesting would be places like Trieste or maybe other Mediterranean ports if we can see how the crisis around in the Arab and Israeli environment is going.
Yeah, well, I can see that Yanis has put a link in the chat for more details on the Greek market. So if anybody's specifically interested in that, just have a look at that. Let's pick up a little bit on the CE region. There's an interesting question come in around that, especially, which is, you know. So thank you, Premislam, for that, by the way. With the visible growing demand for manufacturing due to nearshoring and other trends, what's your view on the CE region as the industrial hub of Europe? Labour costs are still 3 to 4 times lower than Western Europe. And in countries like Poland, the availability of modern industrial logistics space is actually quite high at the moment. So it'd be interesting to get anybody's take on that.
If I can start, Richard, what we see is that already for a number of years, a lot of companies chose Central and Eastern Europe as a low-cost alternative close by. You know, that was actually also the difference with the American companies. American companies went far more, set up far more manufacturing facilities in China than German companies who just went to the other side of the borders and went to the Czech, to Poland. I think with that reshoring trend, Central and Eastern Europe is also doing, has a lot of opportunities, as the person who posed the questions mentioned, lower labor costs. I have to be honest, we see also labor market labor availability in some Central and Eastern European regions really becoming a difficulty. If I talk about some parts in the Czech Republic or Hungary, some parts also in Poland, where it's really difficult to find the right personnel. So that idea of Central and Eastern Europe, that low-cost manufacturing base with abundant people, that time is over. And you can see it also on the migrant streams, right? On the number of non-Polish workers in warehouses working in warehouses in Poland. And the same goes for other countries. So I think and labor markets are on a regional level. So if logistics service providers or manufacturers or brand owners want to set up a warehouse, labor market analytics is very important. And labor markets can vary in 30, 40 kilometers because that's what warehouse workers travel on a regular basis.
No, it's interesting. We've only got around 2 minutes left. So I just wanted to pick up on somebody else mentioned in the chat. And of course, it's something that happens in Asia, the sort of multi-story facilities. If we're short on land, does that mean we're more likely to get multi-story? So I guess it would be good just to get everybody as a final kind of 30 seconds each, just on, I suppose, what you think is going to be the key trend coming up that's going to be influencing you, and what does that mean for the real estate side? Let's start with you, Raimund, if we can.
So coming multi-story will be, it has to be multi-story because otherwise we cannot deliver the required space. But I still think most of the market is getting it wrong, far too complex, far too expensive. I think there are easier ways. We are working currently, so hopefully there will be a new city logistic building, because watching it for a long time, but it has to come. So there's no other way, because otherwise we cannot deliver all the space requirements.
Okay, good. Ingo, over to you.
Yes, absolutely. I think in some areas, like we see it in Cologne or Rotterdam or Amsterdam, we have already seen that multi-story buildings. I think, Raimund, we did for one of your former companies, we did a lot of multi-stories in the fulfillment center. Absolutely. To meet the demands, we need to look at some multi-stories areas. That is the Cologne area, for example. That might be the Frankfurt or the Munich area, no? So that the land prices we have to pay there, it needs to be correlated with a multi-story building. Otherwise, we cannot develop.
Okay, good. And Inga, over to you for your view.
Yeah, I think they're here. They came to stay. Actually, some things just need a little time to adjust, and the human being is not very fast at actually adjusting. So I think we'll just need to be a bit patient, but they're here to stay. Yeah.
Okay, good. René, over to you.
I think at the end of the day, it's a trade-off between land cost and operating costs. So what we see in Hong Kong and Singapore, certain parts in London or in Paris, where you have inner city distribution centers, which have to be multi-story because there is no land available. But the land costs justify that you, because you save square meters on surface and then you go into height. Currently, let's say we still see that multi-story buildings, which are, by the way, not great for every type of warehousing, are still 35% more expensive bottom line than having it in one dimension. So, but if land, like Raimund said, if land costs go up, you will reach a tipping point where it becomes, where it will make more sense. And we see it now already with some of these city logistics centers in metropoles like London and Paris.
Great, and final word to you, yeah.
I think we will see not one solution and not two solutions. We'll see a wide range of solutions because the logistical markets, real estate, the demands on real estate are so different still. If you look at the whole of Europe, that you certainly have multi-story in a couple of areas, but you know the classical sheds as well in Spain and France and other countries and many spots in Paris and Frankfurt or Munich maybe multi-story, but the building regulations have to adapt to that. That's a big stumbling block currently, not only in Germany, that they are so expensive to build that it's hardly feasible at the moment.
Okay, interesting. And we are sadly out of time. Really fascinating discussion there about a lot of the trends that are driving the occupier market, the demand, but also supply chains and what that means for real estate. Thank you also to everybody who's been in the chat putting questions. I can see that that's still incredibly active. So I'll leave that open for a little bit afterwards and you can continue with that dialogue. Thanks very much to all of our speakers. Thanks as well to Transport and Logistics for being the partner on this. We look forward to being in person next year at Transport Logistics and do join us there for that. And all that remains to say is to say thanks very much to all of the speakers for sharing your insights. If you're joining us live, thanks very much for that. And if you're joining us on demand, thanks very much for watching. Thank you very much, everybody.
Thank you very much, Richard. Thank you very much to the audience. Thank you. Cheers. Bye.